all right. Good morning, everybody. Hope you guys are all having an absolutely amazing day. Welcome to our live edition of the Daily Market Commentary. For those of you brand new, my name is Chuck Fulkerson. We'll dive through this session as we go through today. There's a little bit of a delay on the chat window, so please, if you have questions, type them into the chat box. I should be able to see them without a problem. And I'd love to make sure that I get as many of those answered as we fly through today. But if you're new to the channel, make sure that you are a subscriber so you get the notifications and alerts. So let me go ahead and shrink my face because you would much rather see the charts than my face. And let's go ahead and take a look at our markets today. We're going to go for about 30 minutes. So as we go through our session here today, if you have any questions on what we're looking at, please let me know. So let's start with, we always leave our lines on the charts. And the reason that we leave the lines on the charts is because we think it's important for you to be able to see what are some of the things that happen in our trades after the trade hits. And so here was one from yesterday. This actually didn't meet entry until later in the afternoon. We wound up getting about a 2-to-1, maybe a 3-to-1 move away from that level, but then it kind of died off in the overnights. That level, then again, we had a little bit of a move off of it in the overnight, and now we're kind of chopping along sideways. So what I need to do is remove that level at this point. That level has been traded through a couple of times, and so what I don't want to do is overuse that zone and overuse that level. So what I'm going to look for next is where I think my better opportunity lies, and I've got to go to the gap fill area, right? When I go to the gap fill area or the area here just below the gap fill, I think that's the one that makes the most sense. So I think there's a chance that we'll continue to trade down this morning. I know we're up 6 points from yesterday, but our price momentum is still having us trade down a bit. So we could see a bit of a reversal right here at this 31.13 by 31.16 area. So keep an eye on that as a place where we could see potential price reversal coming back down into this range. If we do get that, the tightest your stop can be is down below this 31.08 at this wick here. It might be better to have it just there below the pivot. Now, what if you want to try to go short and take advantage of moves until that area? Well, if you want to go short and take advantage of moves until that area, we're definitely, we've been unable to put in a new swing high off of these demands. And so that tells me that this 15-minute demand down here is probably not going to hold. And you might even get a little bit of a reversal right now. If you wanted to go short now, I wouldn't be against it. With a stop just above 31.45, just keep it very, very, very tight because we've already come below this candle's low. Now, I don't typically do candle-to-candle trading on a 15-minute chart. Usually on a 15-minute chart, it doesn't make sense to go candle-to-candle. Usually on a 15-minute chart, you want to just go you want to go more on the bigger time frames on the candle to candle. So I don't know that I would do that. It doesn't make a whole lot of sense. Let's move over and take a look at the NASDAQ. So in our NASDAQ position, we looked and said yesterday, okay, if you were to consider going short, you'd have to take a breakdown below this line here. But we didn't get the prerequisite basing required for a breakdown. We are getting it now, however. I would say that we're actually better poised now for a breakdown than we were yesterday. And so, my rules are pretty simple. Don't spit into the wind. Don't tug on Superman's cape, and don't short the all-time high. Right? Those are pretty simple rules that I have. And so, with those pretty simple rules, it's not going to allow me to short any of these supply zones that are above me. I'd much rather take a breakdown if price gives me a clean breakdown below that 10,500 level. I think that this area here of demand, while yes, it is demand where we traded in there a few times, I think that the probabilities are that we will trade down through that level and come into this area down here, this 10,400 by 10,404, somewhere in this range. This, to me, is a very clean level. Now, this is a level that was formed on Sunday night, but let's talk about this level formed on Sunday night. It was formed on Sunday night at about 6 p.m. Well, if I go back to my S&P level that worked yesterday, which showed up right here, It was the level that was formed Sunday night at about 6 p.m. And if I go to my Russell level that worked the day before, um, off of this area right in here, here it was right there, it was off of this level formed at about 6 p.m. So what we've seen is that level, and that worked the day before, and we pulled that off the charts yesterday. But that level has worked. That 6 p.m. level has worked in all of our markets. So when I slide back to the Nasdaq, I do always look at the times that levels are formed and see the correlation between equity markets on the time levels are formed. I think that that's actually something that makes a lot of sense is to utilize the time levels are formed as a way to see good tradable opportunities. So I'm going to look down here for a breakdown, and then your target would be just before this area in here, at least target one, right in here. And if you wanted to stay short at that point, the only way for me to stay short at that point is to see that this level fails. Then I could potentially look for a reversal area on a breakdown. Now, until then, I'm still overall net bullish. And overall net bullish means that I would look for a pullback to a quality area. Now, I will say that our 4-hour is definitely showing some momentum waning. We are, I mean, because essentially this was a parabolic move up, right? Nearly. I mean, this is a very strong move up. And so with that momentum that's waning just a little bit, I wouldn't be surprised to see a pullback into this region for then price to continue to trade higher. I'm not changing my overall bias of being bullish. There's no reason to do so when we're, humming around at all-time highs. What I am doing, however, is waiting for quality entries. All right, so let's look at the Russell. So looking here at the rut, we see that this 1414 area was the level I was looking at yesterday for potential breakdown. Unfortunately, we didn't get the prerequisite basing to allow us to enter into the breakdown. Now, since you didn't get the prerequisite basing, that meant that you had to get short on a rally back up to a supply level. If I slide to a 15-minute chart, I didn't even make it up to the supply level that I would have had set up for the reversal trade. This little 15-minute area here, we just missed it by a few ticks. And so I'm actually going to take that area and move it to the higher one. And I'm going to come right here, although the pivot up at the top is better. Originally, looking at this, my eye was to say, well, I'll look at this area right here. But what's my problem with this area? Somebody let me know in the comments. What's my problem with this area here? I'd love to get you guys' thoughts on that, because it's formed at a decent time of day. I mean, the markets are open. But what's the problem with that area? It'd be great for somebody to let me know. So looking at this up here as a reversal, I think that one makes more sense if we come back up into that region. It's just the very top of this wick. Now, why am I taking it if it looks like it's a of a retest of this area to the left? Well, the reason I'm looking at it is because this wick got higher than this area. And by getting higher than this area, it means that we created a new authentic supply of sell orders up here. Right? We created a new authentic supply of sell orders up here, which is exactly the opposite of why we don't like this area down here. Very good. Already retested and used up the orders. Nice job on that. Because this, to me, is a retest of this area here. This, to me, is actually a really clean level that has already been hit once and price moved away. That's the reason that I don't love this 15-minute level. This one here, the reason I'm okay with this one is because we got higher than these areas, and that showed me that, okay, we had to have had a new influx of sell orders in order to get there. So that, to me, is the biggest difference, and it's a subtle difference, but it's important for me to pay attention to and to look at. So that's what I'm going to look at for today inside the Russell, if we make it back up to that region. I don't know that we will. Now, on our 4-hour, our 4-hour trend on the Russell, if we come back up to here, we definitely have a lower swing low, right? Our swing low is here. I technically don't have a lower swing high as of yet, but if we reverse there, then I would have a clean lower swing high. But the Russell's it's overall fairly sideways in its price action, whereas the Nasdaq is essentially straight up, right? The Nasdaq is essentially parabolic in its upward momentum. And so what we're hoping to do is to take advantage of, if we see that weakness in the Nasdaq, the Russell might make the most sense as the market to take advantage of that from a shorting and a short trading possibility. All right. Let's take a look at the Dow. I know I don't normally look at the Dow inside of the daily market commentary. I typically only look at the Dow inside of our live trade rooms, but I figure we will open it up for today. Now, in the Dow, we looked at this area down here as demand. And the reason I chose this area here is because it's a bit of a rally-based rally above a pivot low. The pivot low is this wick, right? This wick down here is the pivot low. Price came up, we got a little bit of basing in this 1 hour candlestick, and then price popped up. The gap is just part of the move. Now, the interesting thing about this is you're going to have a lot of traders, a lot of people that are going to go short once we get below here. They're going to sell when we get below this area. Now, why are they going to sell when they get below this area? Because the gap has been filled, and then we've broken that area of the gap, right? And so since that area of the gap has been broken, a lot of people are going to be selling. Well, that's where I want to be buying, and I want to be buying at an area that seems to make sense. So I like this level down here for a potential reversal in the Dow. For those of you that are interested, on a 4-hour chart, our Dow has not put in a new swing low as of yet. We are technically still in an uptrend, but this is a bigger pullback. So one of the things that I look for when I look at kind of where are we on the trend is I tend to, let me see if I can't do I tend to look at the picture of how much have we moved down on each one of these, right? So when I look at this here, we pulled back that far. When I look at this here, we pulled back this far. When I look here, we pulled back this far. Well, what's happening with each of these pullbacks? Let me just put them side by side, right? There's our first pullback. There's our second pullback. Here's our third pullback, right? It's obvious to see that each of those pullbacks are getting larger. And with each of those subsequent pullbacks getting larger, it means that we have more exposure, right? We've got more exposure and more possibility that prices are gonna continue to come down. So I'm gonna use that as, call it a clue, that the market's telling me, okay, we definitely see some weakening of momentum, and so that's gonna shy me away a little bit from this level if we get any more basing in front of it. So if we get any basing between 25.7 and 25.6, I don't think that I'm going to take this because of the weakness that it's showing. So hopefully that makes sense to everybody on how we use that. So those are our 4 equity markets that we're going to look at today. Make sure as we go through the day that you guys are checking for updates. We have, I know a lot of you on here that are watching are Traders Army members. One of the things that we try to do every day is as our daily market commentary levels get hit, we show the updates. So keep an eye on the updates today. We've actually got one update that was already posted in the Nat Gas trade, posted to the trade worksheet. So let me take a look at that real quick. It's a long on the 120, so I'll go take a look at that one here real quick when we look at our commodities. So looking at our commodities. Oh, I see the trade that Justin put out there. Looking at commodities, let's start with crude oil. Now, crude oil, we had spoken the other day about the bigger picture fact that it looks to be that we are potentially going to have some breakout momentum above 41.50. If we get above that 41.50, I think that it's a clear path up to 45. And when I look at this, the reason I think it's a clear path up to 45 is because of this big speed candle right here. Now, I know a number of you are going to say, "Yeah, Chuck, but that was on a different contract, right? Different contract." I don't care. I don't care. And the reason I don't care is because this is the way most people are looking at charts. Is they don't use the adjusted, unadjusted, all of that stuff. It's really just stitching together the right charts in the right time frames. So what I'm looking at for here is I'm saying, all right, if we get that breakout above there, there's a longer term trade opportunity for price to continue to move higher. But this is going to take some time to get up there. So what we looked at when we looked at this trade was we looked at taking it from the concept of using the options on futures. Um, the options on futures, if I take a look, if I go all the way out to say October, um, and I look at picking up a bull call spread in the options on futures position, I think that sets up a really good trade. Vertical spread, if you do say the 41s, 41 by 50. Actually, we'll start with 41s by 46s, so $5 spread. That $5 spread gives me a 253 delta. Now, we've got to remember that this is a stock represents 100 shares. Stock represents 100 shares. In futures, because you're trading options on futures, it's 1,000 barrels in a contract, right? So your delta of 253 is it's like a 25 delta when I'm doing a stock. So I'm essentially getting a $5 spread for a $1.98 debit. Now, for those of you that watch our options trades and understand how we look at options positions, what I want to see is a no more than a 50% debit relative to the spread. So in this case, with a $5 spread, my maximum debit would be 250. Well, this follows the rules. And I need a delta of at least 25. Well, if I'm trading options on futures and there's 1,000 contracts, that delta needs to be 250. So this hits my minimum delta requirements, and it hits my debit requirements, and it sets up a pretty nice risk profile that I still can profit on a move up, but it lowers my overall exposure, right? If everything falls apart, I'm risking $1,900, and I can certainly lose more than $1,900 in the options trade, or in the futures trade, excuse me. Whereas in the options position, I limit my exposure. So I know we don't talk too much about options on futures in the DMC, but we do look at them in the live trade rooms, and I wanted to bring that up because I think that's a swing trade way to play this position. All right, let's look at gold. Now, gold yesterday, we had a level in gold that just completely got laughed out of the building. I mean, it was no total stop out, and anybody who doesn't show you stop outs is lying. You're going to get stopped out. And this was a really nice base drop below a pivot high. The market just blew right through there. And it was almost insulting the way the market just slapped it in the face. But if you're going to get stopped out, that's how you want to get stopped out. I want to get stopped out quickly. I want to be proven wrong quickly. I don't want to allow my trades to continue to linger. I want to be out of those positions whenever it looks like they're going against me. Now, interestingly enough, what happened here? What happened here? What happened to our old area of supply in the overnight trades? The old area of supply acted as the new area of demand. I don't feel bad. Got me too. I'm okay with that. That it nabbed me, because more often than not, those levels are going to be pretty effective. But this is a really good lesson on oftentimes these old areas of supply will act as really strong levels of demand coming back down into them. You'll see that I'll color code those levels as yellow. Now I didn't have this one set up because frankly at 8 o'clock at night I wasn't identifying it, unfortunately. But we still have it's a good example of price moving off that level. So now what do I anticipate? Well, we call this a speed candle, right? We call these speed candles. And what do we know about speed candles, right? When we think about speed candles, those tend to get retraced. Good point on that, Steve. RSI going parabolic would give you that indication that, okay, maybe there's a chance to get hammered on this one. So I would look down here for, if we do get a retracement, that's a very strong move for us to look for a potential reversal if price comes back down into that region. On the 4-hour, now I had been looking at, our 4-hour trend is still continuing to move higher. And so that was technically based on the fact that that was a 4-hour trend. Our 1-hour trade should have been a confirmation short anyway. Um, and so that, yeah, and these speed candles, exactly right, Matt, they tend to get retraced. So since these tend to get retraced, this is where I would be looking for a reversal if price comes back down into this area. I don't know that we'll make it back that far, frankly. In a strong uptrend, that doesn't always happen. All right, let's move over to Nat Gas. So in Nat Gas, Justin's got the level at 1755. Well, he's looking at a 2-hour chart. So his was done on the 120-minute chart. Now, that's not a chart time frame that I normally use. Not a time frame that I normally jump on. One of them that Justin looked at when he did the trade pick. So it's this level right in here. So for those of you not knowing what I'm referring to in that piece, it is in the trade worksheet. Here, our entry that he's got here is 1755, stop at 1727. So we're giving it a stop all the way down to here with a target one at 1839. So target one up in here. Okay, so let me change that to red. Now, I haven't watched the video yet, so we have if you guys don't know about it, you guys can watch a short video on the trade itself. So you can watch a short video on the trade itself, I'm sure, where Justin talks through his reasoning and rationale behind it. But this is the current setup on the 2-hour time frame. And I think what he's looking at, it's not only this little bit of sideways here before a move up. This was done right at that 6 o'clock level, right at that 6 p.m. where we saw our other markets reverse. And if I look further to the left, what do I notice? What do I notice when I look further to the left? Well, this whole area has been turning points in the past. Do these areas over here matter to price coming back to this demand zone? What do you guys think about that? Do those areas matter to price coming back to that demand area? Because when we look at, one of the things that many people are taught is don't cut through candles. None of these levels matter anymore because there's no orders that exist. I will vehemently disagree with that. And I will tell you that they matter because there's enough people that look back and to the left to identify these zones. And this is the difference between demand and supply areas and fair price value areas. And that's why I think that this still sets up for a pretty nice little trade. So, all right, let's go take a look at bonds and currencies next. I got a few minutes left, and then I want to end the session by looking at an SPX options trade potentially for today. We'll see if we can get any credit for it. I know we looked at it last week. We looked at one right after the market opened. So when I look at the ZN, my 10-year note, and I go to my 4-hour chart, my 4-hour chart is telling me unequivocally to not bother. That's what it's telling me. Don't even try to trade this thing. Stay away, do not touch. So I'm going to listen. I listened to the 4-hour chart. So yesterday, in the daily market commentary, we had this candlestick here, which was a huge reversal candlestick. And while I was recording the video, I said, okay, this is a good opportunity for a candle-to-candle style of trade. I'm not willing to get short up here, but with a candle-to-candle style of trade, we have a good potential for an entry. Well, I'm glad that I didn't. And the reason I didn't was because we never got lower than that candle's low. This is a good example of why we use that candle-to-candle style when we don't have high-quality zones above us. And that's exactly what happened here. Price did not give us an entry. It actually stayed above there the whole time. And so we never really had an entry on this position. Well, here's the good part. Notice we came back to there in the overnight and rallied up off of up off of that level. And since we rallied up off of that level is going to still be valid for a breakdown if we get quality basing. I still need quality basing to make that level make any sense, right? And I don't have it at this point. So until I have that, then I can talk about it. So for now, I would say that you do have this little area right here. Oops, wrong line there. As a potential reversal, and this is off the 1 hour chart. So we're looking here at a level formed around 11 a.m. So right around European market close. Pretty good little zone. Now, there's a little wick over wick right here, but that's already come close to being tested with little move away. All right. In the euro, so our euro trade yesterday worked out pretty well. So those of you that caught that euro trade, you still may be in the position. The overall trend in the Aussie, Sharif, let me go take a look. So if I look at my 4 hour, my 4 hour overall trend is the word I like to use is meh. I like to use the word meh when I'm in a trend like this. There's not a clearly defined beautiful trend, and so if you've got to think about it, then I'm in a meh, sideways, boring trend action. So that's what I would say to that one. Meh. My euro trade, we had a really nice move off of supply in here. Normally, I would convert this to a confirmation entry for a retest. I'm not going to in this case, and the reason I'm not going to is because we came close to it here without entering, which is enough to make it a retest on its own. So we've traded into it once. We almost traded into it a second time. I don't want to go to the well to one time too often, right? I think that makes that makes for a little bit more of a risky situation if I go to the well a bit too often. So what I'm going to do is I'm going to let this thing kind of hang around. I don't have any really clean. If I go to my 4 hour, I'm still kind of meh. So I'm just not going to add anything new to the chart. I'm just going to let it be for today. Which, by the way, that's perfectly all right to do. Next is our Canadian dollar. So this was our Canadian dollar trade. And this was the Canadian dollar trade that we identified on Sunday evening. So Sunday evening, we identified this as or not Sunday evening, I'm sorry, yesterday in the DMC. We identified this little level in here. The Sunday evening one was earlier. So a little wick over wick below a pivot high. Price gave us a really clean touch and go move away from that level. It came down and hit target 1 after a few hours. And then if you had multiple targets, you've gotten another move. If you're still in the position, I think at this point, it's more than prudent to take your stop and move it to, I would say, above this red candle's high. So if you take your stop now and you move it to right here, above that candle's wick, I think that's where more than prudent to move it to that point. You've now locked in a free trade, and hopefully you've already taken a little bit of money off the table. So now that level up here, because we just did a touch and go, I'm going to switch this to a confirmation style entry and allow us to use that one again if price comes back into that region. As far as our 4 hour trend, it's very much like the rest of our market, meh, when it comes to currencies. Great British Pound. So in our Great British Pound position, we actually are approaching some supply up here. So the supply that I've identified is an unbalanced wick over wick level at 2622 by 2647. Moving a little closer to there. We almost approached it yesterday, but we didn't get even close enough for me to switch it off of a confirmation. And so in between supply, in between demand on this one. So I'm gonna use these levels here as both of them are good reversal points if price comes back into that region. Let's take a look at the Japanese yen. So in our yen position, this frustrates the hell out of you. When you've got a level that's super nice and we miss it by, I don't know, 2 ticks. I feel like that was a really nice, really clean level, good setup, drop base drop below a pivot high. Price comes up and goes, hey, I'm not going to get you in. So now I need to change that area to a confirmation entry. I cannot maintain a limit entry on there. It has to switch to confirmation entry because we came close to the level without getting filled. That's why that rule exists. Um, from there, we did have this short here, which I know a lot of people took this short off of this level. We've come close on a couple of these areas inside of the Japanese yen. So looking at that, I don't know that I want to reuse this area here. Um, I'd probably have to come a bit higher to this pivot area up here if this first level breaks. Overall, though, on our 4 hour, we're still very sideways. All right. Let's take a look real quick. Let me go to the ES, and I want to identify some ranges and some boundaries today. Might work for those of you that do the single 1 day options trade. I know a lot of you out there are trading the SPX, and you're getting, you're looking for 1 day options opportunities in here. So looks like we're going to open, 3140 on the futures market, 3145 on the ES. So I always correlate that back to say, okay, where are my ranges for the day, right? So when I'm looking at my ranges for the day, I'm going to look immediately to see on my 1 hour time frame, I have 3111 here, which corresponds pretty nicely. Yeah, I'm glad it's a big difference, Greg. The literally 6 minutes after the YouTube ended last week, I went and ordered a new laptop. So I just had enough. So this range in here, this 3116, this gap fill area, you've got a 3112 in here. Now, I'm saying that I think we can make it back down to this level. So you've got this is the I think slightly more aggressive options position in here. If you can sell this 3110, I think you're going to be doing pretty well. The 3110 by 3115, I think makes a lot of sense for those of you that trade that style. I think I'd be a little bit more comfortable going at the 3185 today than I would the 3112, frankly, because it just looks to be a little bit of a pullback day. Now, if you take that style of trade, understand your risk and exposure in there. But the range I'm looking at today is between these areas because of this area of resistance and this area of support right down in here. So keep an eye on those ones as we're moving forward. Individual equities and some individual stocks. One of them that I have kind of kept an eye on here recently is Boeing. Continue to keep an eye on Boeing as we've got some opportunity, I think, for price to continue to move into this region down here. So for an intraday potential, I think you've got that area right in there. One of them that I look at pretty frequently, I know it's a little bit higher price one, is Chipotle Mexican Grill, but CMG has just popped. We got a brand new, all-time high through here. We've got earnings coming up here real soon, and so as our earnings are coming up, when I throw on my implied volatility range, surprisingly, my implied volatility is still pretty low. So this could be an opportunity to take advantage of a trade that benefits from implied volatility rising, as we are probably going to rise coming into earnings a little bit. Last time we fell coming into earnings, but I think that was mostly due to the fact that this was the original COVID bump that we had in volatility. Hemeth, let me get that for you real quick, and I'll get that to you. This would be our. I think you've got a potential for a pullback long, and I think you could do anything that's going to generate positive vega. So if we come back to our gap fill level here, I think you've got an hourly level right in there. You might even have a slightly smaller level right here on if you're really looking at a day trade to come in right there. So the 1080 by 1074 is going to be pretty good. Komivi, thank you for putting it in. That's the correct support@tradersarmy.com for our email address. Real quick, I want to just go over a couple of things that I think are good to take a look at. We're doing on YouTube again. If I go to the calendar here real quick. We have a trade review session coming up, and this is open to everybody. You don't have to be Traders Army members. We have a trade review session coming up on Saturday, July 18th. 8 a.m. to 9 a.m. If you want to register for that, you can register for that session. We don't have the registration link exactly open yet, but I at least wanted to make sure that um, everybody had it. It's gonna here's the you can just go to Traders Army. You just click here to join live when we're ready to go for the class. So for those of you that want to come, that is on Saturday the 18th, 8 a.m. to 9 a.m. Central Time. So feel free to join us for that. Justin Krebs will be reviewing that. Traders Army members, if you want to submit a trade for us to review, please do so in there. And then anybody interested in the options trading intensive class, just let us know. I think we've got 2 people that are left for that one, and that's all we have left in that room. So, all right, everybody. Well, I'm going to wrap this thing up for the day. I hope you had a good session. I hope you learned a few things. If you are already a subscriber, then I'll see you tomorrow morning in our live trade room. Everybody else, I'll see you in our daily market commentary, which will be back on Friday morning. I appreciate you all so much. Thank you. So I can't tell you how much I appreciate this as an avenue to talk and to get out and get to know people. Thanks so much for joining us today, and I'll talk to you soon. See ya.